The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the wheat complex tried to give us a little bit of a turnaround Tuesday. Otherwise, it was fairly mixed action in quartered soybeans and in the livestock sector as well. Not much to write home about the outside markets either on Tuesday's trade. Let's dive in and get some thoughts and perspective on where these markets sit currently as we near the end of July. Tyler Schau with agmarket.net joins us for market analysis here today. Tyler, it's good to talk with you again. How are things up in your neck of the woods there in North Dakota?
They're a little bit wet here this week. Been cool and wet, which is good. We were needing some rain, and we're getting it here this week.
Well, I know also this week the spring wheat tour's happening, the Wheat Quality Council, and they got rolling Tuesday. It'll be interesting to see what they have to say about the condition of that spring wheat crop. But I know, especially North Dakota, Minnesota, a lot of the reports I've heard, and maybe you've heard the same or something different, but spring wheat's been looking pretty good. It seems like a lot of the issues for spring wheat are in the PNW right now, Tyler.
Yeah, that's the sounds that we're hearing too. Locally, I've got a lot of producers right around me, kind of central North Dakota, that are looking at a pretty good wheat crop. Probably not as good as last year. Last year was just one for the ages. This year, it's been a little cooler, which is good for wheat, but we just had really good timely rains last year, had very good temperatures. This year, we're not really seeing that quite as much. Now we are picking up some rain, as I speak. The wheat tour, this is always the week where, all of a sudden we start getting some news out of the wheat tour where maybe the crop was better than what a lot of the producers that I'd been talking to had told me. It'll be interesting to see. They take the first leg of that tour today. They go through southeast North Dakota. There's a lot less wheat grown in southeast North Dakota than 10, 15 years ago. So I would say the heart of the data you're going to find is going to come from tomorrow when they get into central, southwest, and northwest North Dakota.
Well, we'll be watching to see what that tells us. You combine that with the winter wheat harvest that's progressing and more, and you look around the world and not much in the way of production issues. Maybe some of that chatter still out of the Black Sea, but this wheat complex, nice to see a little bit of buying on Tuesday, and it felt like wheat tried to help quartered soybeans to the upside. I mean, what's your take on Tuesday's wheat action, Tyler?
Yeah, that's what it feels like. The U.S. wheat price, cash wheat price at the Gulf is one of the cheapest in the world right now. But the only other place you can get it cheaper is going to be out of Australia, and that's on some poorer quality wheat. So we've got that going for us. I guess I should say the silver lining there is I think it would be difficult to push wheat a lot lower. I'm never ever going to say it can't go lower because we all know that it could. But it does feel like maybe we've kind of found some bottoming action for the time being. You are correct. We're kind of getting through the slug of harvest on the winter wheat, and some of that harvest pressure is starting to come off. You're starting to see some of those winter wheat contracts maybe bottom out, start kind of searching for higher prices. The problem for a lot of the growers we work with in the Northern Plains is our harvest is right around the corner. It's really hard to get too bulled up on wheat prices when we've got another decent crop. I'm not going to say it's a monster crop like we had last year, but I do feel like we're going to have a decent spring wheat crop harvested here over the next month and a half. And then throw in the fact that they have been receiving some beneficial rains in Canada. That was an area of concern there in May and June. Canada's prairies have been getting some beneficial rain over the last few weeks, and looks like they'll continue to get a little bit over the next week, which will probably keep a lid on spring wheat prices as we move forward.
What about switching over to talk quartered soybeans? And maybe I'll just start here. Is wheat, in your opinion, going to be an anchor or a catalyst to help quartered soybean prices, with where they're at right now? I mean, could wheat hold down the row crops, or could wheat help propel us out of some of these doldrums that we've been in terms of quartered soybean price action, Tyler?
I don't know that wheat's going to be able to do much in the face of just a ginormous crop of corn that's going to be grown here in the U.S. And then a really big crop of soybeans that's going to be grown on a global stage. And I mean, I can throw that same comment in for corn too. Not only does the U.S. Or is the U.S. looking at a very large crop of corn coming off this year, South America has a very large crop of corn coming off right now in their second crop, safrinha. And so I would look for global stocks. There's just going to be a lot of corn to chew through. There's going to be a lot of beans to chew through throughout the world. So I don't know how much the wheat situation will affect corn and beans when you're looking at just this slug of supply that's sitting out there that we got to find a use for. Now, the bright side to that, if you want to look for a bright side, is when you have a lot of supply, you usually find a lot more demand, and demand has been strong in the U.S. I don't foresee that weakening too much anytime soon. But we've talked about this multiple times. The key factor there is going to be what do they do on biofuels policy moving forward.
That's a great point. I mean, there's so many of these things out there: biofuels policy, trade, tariffs, you name it. There's all these, extra factors on top of just weather and growing conditions that we have to pay attention to. And, by and large, the last several months, it's just felt like all of this has been bearish or not bullish enough, I guess. And I think that's got a lot of producers, especially on the corn side, looking really hard at, okay, is my mind made up barring some crazy change here? Am I going to be storing most of this grain this fall, hoping for something later on in the year or early next year? I mean, it just feels like the news has been all bearish or not bullish enough right now, Tyler.
You're precisely right. What bullish news we've gotten has usually been outweighed by even more bearish, in a lot of cases, the weather. I had the opportunity to drive to the Ozarks a couple weeks ago, and from the Sioux Falls, the I-90 corridor, all the way to the Ozarks of Missouri, it's been a long time since I can remember seeing a corn crop look that good. And then when we came home, we cut through central Nebraska, so further west where they usually deal with a little more drought issues. Boy, it was tough to find a rough-looking crop of corn even out in that area. So we know that there has been beneficial rainfall through a very large portion of at least the western corn belt. I know they had some struggles in the eastern corn belt. They did get some rains over the weekend, which I think that's where we've seen this pressure over the last 2 days really come from. The one bullish story that was out there that the market was kind of talking about was the heat in the forecast. And right around 11 o'clock this morning, you kind of started to see that the corn price started to fade a little bit. And I can't be certain of it, but that's about when the GFS run came out, and it looks like temperatures are starting to soften a little bit from where they were forecasted from the day prior. So the heat does play a role. It's mostly the overnight temps, and if they're too hot or too warm. So if those could cool off with the rains we've been getting, you get one more good rain in August, and I think you're going to be looking at a pretty good corn crop. Now, on the flip side, we did see it dry out last year in August and September, and what we found out from that was that hurt the yield by quite a bit from what the USDA was expecting as we move throughout the year.
We're talking with Tyler Schao from agmarket.net here today on Market Talk. In terms of just risk management ideas, and I know a lot of producers they're not getting complacent, but they're maybe not paying as much attention to things right now because they don't love the price. It's been one of those years. But what would you tell folks in this window as we're watching the weather, heat maybe subsiding, but some areas probably could use a little bit of heat on this crop. So, I mean, by and large, weather looks favorable still. There's so many things here. What would you tell producers from a risk management standpoint in the grain trade right now?
Well, I'm going to kind of jump back to a comment you made. I kind of skipped over it a little bit, but on storing grain, we do think there is a play storing grain where there'll be an opportunity to make better sales as we move throughout the year. Unfortunately, not all producers have the ability to store grain. Some of it's got to go. So a couple of things we've looked at on grain that's got to go. off the combine. We're not interested in paying storage rates at commercial storage. We're fans of getting the stuff moved and finding other ways to find ownership. One of the things we've talked about a lot is going ahead and getting some priced, whether that's HTA or setting futures and basis and getting a cash price locked in. You're not going to love it. Then maybe go out and look at some type of a call spread on May 26 corn. You could get into some of those at decent levels where, hey, if this thing does rally and we do see this market turn around, when you're doing a call spread, you're buying a call and then you're selling a call over the top of it. It's going to limit how much of a potential rally you can participate in, but it might be a way to get that 40, 50, 60 cents you were hoping to tack onto this sale earlier in this year. Before we were looking at a market like this. So that's one strategy. Another strategy we've talked about and been thrown out to producers is buying some put options here. We don't love selling at these prices just because, it does feel like at any moment, it feels like we've thrown so much bearish news at this. At some point, that narrative is going to change. There's going to be some bullish stories that pop up. It's always, seems the worst at the lowest. And so we're trying to avoid that in some sense. But the fact of the matter is, you take a look at charts, you can say all day long that the D's corn can't go below $4, but we saw it happen last year. I could foresee that happening again and being in that 385 to 375 level. I'm not making a prediction it goes that low. It's just a possibility that the producer needs to be aware of. So how do we protect against that and defend those last 30, 40 cents from here? We buy some put options that get us some time to make a decision on what we want to do with this crop. But if you're looking at a big crop, if you know you're going to produce over your APH, and there's some producers out there that do feel pretty confident in that, and you can't store it, you probably need to be thinking about getting in touch with your merchandiser and trying to get some of that sold before you get in a deal where basis widens out considerably, or you don't have it sold and they shut the elevator down after 2 hours of receiving every day.
All great thoughts, and it's something too where to one point, September corn, front month corn, flirting with that $4 mark on Tuesday. So D's corn getting down there below 4 is again very possible, but I think it's something to add to that as well. Producers, maybe take a hard look again at your balance sheets, and you might not think that $4 corn, is profitable or pencils out, but maybe if you double check things, everyone's balance sheet on their operation is different. And so you might not love the price, but you might be sitting a little bit better than you think if you take a second look at things, right, Tyler?
Yeah, well, if you take an operation that was looking at growing 200 bushel corn and now they're at expecting 230, and we've talked to some of those people that are in that boat, some with considerably higher yields than that, and also expecting even bigger than what was expected just a few weeks ago. If you've now got an extra 30 bushels of corn to market, that does change the break evens on those. So what maybe felt like a slap in the face just a few months ago, as you make those adjustments, it's going to look a little bit better. Now, obviously, there's going to be pockets out there that aren't in as good a condition or as good a shape, and maybe they're looking at sub APH levels or sub expectations, and so that little tidbit doesn't seem quite so rosy, and they might not like me all that much after making that statement. But that's also part of the risk of the world we live in.
Well, to that point, it's one of those things where we just do the best job we can to try and educate folks, and hopefully folks can make the best decision possible for their individual operation. And it's always a good reminder to folks that the risk of trading futures and options can be substantial. Tyler, let's go over to the livestock sector. Cattle worked off the lows on Tuesday, kind of a mixed bag, I would say. We've been seeing more volatility here at this point, and maybe that's indicative of a top. I'm not sure, but added wrinkle this week, we got cattle on feed and the return of July cattle inventory report after the close on Friday. So I wonder if that could influence some trade action in cattle this week.
It most definitely has a little bit of impact. I mean, people are trying to jockey around those reports and try to set themselves up for what they're going to say. I don't think, I don't think we're going to get anything earth shattering on the cattle on feed report. They've all been kind of coming in exactly where we assumed they would be, which is lower on feed, somewhat positive to the market. I don't know that we're going to see any changes on that fundamental picture. The inventory, I don't think you're going to see a big change from the January report. I don't think we added a lot. This wouldn't be the time where we would be adding a lot of breeding stock into the herd anyways. I think you'll see that January over January. But it is going to be a report people are going to be paying attention to. I mean, long story short, it just feels like every time this thing sells off and some people get panicky and exit their positions, the funds are stepping in and buying, and they just continue to add to their record position in feeders. They're not at record positions in fats, but they continue to buy the fat cattle contracts as well. And it just feels like every time there's a break, the funds are willing to step in and buy it because they feel like cattle are still not priced high enough. And I know that's a hard concept for a lot of people to think about. I was looking at that, going through that with a guy today. The August 25 feeders are 328, a little over 328 is where they settled today. They came on the board at 242 last year in early September. So seen a heck of a run in August feeders, almost $100 tacked onto them. It's probably very few futures contracts in a feeder cattle space where you've seen that over the life of the contract appreciate 90 to $100, but here we are.
It's an amazing thing to think about when you put it all into perspective. And I'll throw this out too. I know box beef has been weakening some, but a lot of folks have really just been tying that to a seasonal decline that we normally see this time of year and not necessarily indicative of waning consumer demand. Would you agree with that?
I would. You're past the July 4th holiday. You've got a lot of those major grilling seasons that are past. So seasonally, we tend to see that kind of pull back just a little bit. So not all that concerning in our book. I mean, at the end of the day, there's just not enough beef out there for the people that want it. And I think that's, the surprising story, or the thing that probably I downplayed for a long time, was just how robust beef demand was. People are going to continue to buy it. But, I've heard this, will people buy $6 hamburger and $15 ribeyes? And I don't know how long they will, but, I mentioned that trip we took. There was 3 of us, my wife and my daughter, and every stop we made at a gas station for a few drinks and a few snacks was over a $20 bill. Mm-hmm. So if consumers are willing to pay that for that junk, they're most likely going to be willing to pay the $6 for a pound of quality hamburger.
That is a great point, and it's something we've been talking about it so much, and we're just going to have to watch and see, because I don't think anyone knows at this point when people will start to push back. Tyler, I'll leave this open-ended for you. We haven't touched on hogs, dairy, cotton, crude oil, outside markets, you name it. Anything else you're paying attention to this week?
Crude oil has just, it's been pretty stagnant for the last month or so. You had that big swing there in June with the bombing of Iran, and had a lot of concern there. And then we sold off, and it's really just kind of consolidating here. I think it's looking for market direction. It's not really getting it. And that could be some of what's holding corn back. If crude oil were to rally and get back into that $70 price range a barrel or over, I think that would be positive to ethanol demand, also positive to corn demand. So one thing to watch, see what crude oil does as we move forward.
Absolutely. Well, I know if folks have questions, they can reach out to you and the rest of the team there at agmarket.net. You guys have a ton of stuff available online, phone call, you name it. You guys have a lot of resources, right, Tyler?
Yeah, we do. Check us out on the website, agmarket.net, and we've got brokers kind of staggered all around the country.
Agmarket.net for more. Tyler Schao, always good to talk with you, sir. Thanks for joining us on Market Talk today. Have a great week. We'll talk to you again soon.
You bet. Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.